Hello and welcome to the Pipnotic Symposium for the 6th of August 2017. In this symposium we are going to have a look at qualifying quality areas of supply and demand. Now the software does a pretty tremendous job, and the update that I'm going to show you shortly to the software is going to do an even better job than it has in the past. There were some kind of fundamental issues that I was boxing with in the current production version that I have resolved in the development version, and this update I will be releasing here very shortly. So I'm just going to show this functionality now, and then we're going to walk through it and see what we're looking at. So if we apply the template, it looks like this, and you can see now the new version of the software is identifying these areas which appear to be pretty delicious, if you can call supply and demand delicious. And the reason that these are interesting is because now the software is focusing on the move away from an area of supply or demand, in this case demand, and the number of periods it takes for price to reach, for example, a given distance away from an area. And so currently the configuration is 3 periods. So when an area of accumulation is formed and then price leaves, it wants a given risk reward to be valid for an area to be qualified, and the risk reward is simply referring to the size of the area of, in this case, demand, and the distance it travels after this has been established. So you can see here that we have an area of demand which is 19 pips. The indicator out of the box wants to see 4 times this to the upside, so it wants price to leave the area of demand the distance of 4 times the size of this area of demand. So in this case it wants it to move roughly 80 pips. So if we move the mouse to the distal area, just here, we go up here, and it got pretty close to 80, 78, so that's good enough. So as soon as price leaves the area within 5 bars, 1, 2, 3, 4, 5, on the close of this candle here, this area was marked off. We have another one here. This one was a little bit smaller. We had 16, so it wants to see about 4 times that to the upside. So if we have 16, it's looking for just over 60. That's how far we get. And it goes just over 60. So here we've got about 64, which is actually exactly 4 times. So that was pretty interesting. And here we have the same thing occurring. Here we have 24, so 4 times that. It's just shy of 100. Which we got. We got about 90, 95 pips. Price came down, tested, moved north. Now we have this one. This has been established. This is a very nice one. You can see how price really left in one period, then came back, almost came back. It came back to the highs. And here price had perhaps a bit of trouble moving higher. It didn't leave like this one did, or like this one did, or like these did. It took a few candles to get away. It took 1, 2, 3, about 3 candles to move, so one more than the previous ones. But this stuff is all configurable in the new version. I'm just going to show that quickly. And we have a risk to reward ratio. Actually this is 3 times, so it's looking 3 times the size, but you can set this to a higher value. If you want price to really leave the area, then you can say, for example, 5 times. And it has to occur within 5 candles. So price has to leave this area of demand 5 times the size of demand within 5 candles. So 1, 2, 3, 4, 5. So if we enable this, you'll see that some of these levels are going to disappear. You see quite a few of them disappeared. So this is a nice one. Price left very quickly. Price left hasn't come back. Price left and price left. And so the greater this value, the fewer the areas of supply and demand that are going to meet those requirements. Then we have this price imbalance. We put this back to 3, the price imbalance. If we put this on, for example, actually let's just enable that, get those back, and then we'll. So price imbalance, if we say we want this to happen within, let's say 3 candles, then you probably notice that some of these are going to disappear. And you can see this one did 1, 2, 3. It happened here. 1, 2, 3. It happened here. 1, 2, 3. It happened on this candle. And so if we want to really scrutinize these areas and say we want this to happen in 2 candles, which is less, then it's going to have a tougher time. We managed to get it here, these ones here, these two, and these two. This is a very small one, so that's easy. And so, of course, the further you go down, the better. So if you go down to 1 candle, then these are going to be jumps out of these areas of supply and demand. Boom, 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 boom. So these are really nice, very good examples. You go on a daily chart, see the same thing. This one gaps up, but nothing here was able to qualify. That price did not manage to move 3 times the size of this supply and demand, or this demand, in 1 candle. But we can enable that. We can say, so we can change it, and we can say, okay, we want to enable maybe 3 candles. So price managed to move away within 3 days. Then all of a sudden you can see that we have some periods that are managing to line up with the. So now we have the software that is capable of identifying the areas of supply and demand where we have the biggest price imbalance. This is a terrific price imbalance. We have another one here. We have another one here. And we have another one here. This is nice due to the imbalance, sorry, the gap, and we have a couple down here just below. And so it's phenomenal. And the software, I think, will be able to really find these incredible areas. Also, you'll notice that the software is now drawing these areas of supply and demand from the high of the body of the bar of accumulation that established the area. This is also an update that I've issued because I felt that this was a more true representation of these areas of supply and demand. You want the whole body to be included. This one here, for example, because the volume of the accumulation is, of course, within the body of this candle, and this one here, this one here, and this one here, and so on and so forth. So I think you'll find that this will be a tremendous update, and I'm just making sure that there are no bugs in this, but I should have it ready here within the next couple of weeks or so. The rest of the updates are the same. We have the graded period multipliers. This is the same, 0,1. You're going to see the current period as well as the current period plus 1. So we're going to see the daily areas here. So you know that when you're buying here, you're also buying on the daily chart. There's a lot of clout there in the daily chart. So that should be a really nice update for us all, and I think you'll really like that. Good. Okay, let me set this back to 1. I'm actually finding now, due to this update, that I only want to see the current supply and demand on this chart, because I mean it's giving a tremendous value. And so I'm trying not to spend. I'm trying not to. I haven't found the need to have greater period multipliers of more than 0, which is great, because when this is the case, the indicator is racing. The performance is incredible when this is the case. So kind of fiddle around with it when it comes out, and then if you have any questions, we can address those in a symposium. Good. Okay. Well, I've had a question that was sent in regarding how do we manually identify these areas of quality supply and demand. And I think once the indicator, the new version, has been released and you're using it, then I think you'll be able to see this. And you can see here, just as we went over in the rules, that when price accumulates and then leaves like this, so price travels very far in a very limited amount of time. When you see this, this is a sign that there's a very clear imbalance in supply and demand. When price does this, kind of accumulates and then goes up and then comes back down, I mean, this is not demand. This is not demand at all. Here we have a bit of demand. Price came down, accumulated, we rallied, we accumulated, we rallied, we did not come back to the area. This is okay. So you want to see these really strong pushes away, like this here, and like this here, and like this one here, and this one here. So you're going to see these absolutely all over the place. But the indicator will bring your eye to the areas that are technically qualified. And so you have to think about, I mean, when you program a piece of software, it has to be 100% objective, because you're making rules with which to view price. And so the indicator is now running through price, and it's looking at these areas of supply and demand with some very specific rules. And if these areas of supply and demand are not do not meet these rules, fit the rules, then everything's going to fall to the ground. It's simply going to walk past it and not even notice it. Sorry, I had a bit of a pause. There was a meathead doing wheelies down my road. Good. We have a look. So if we look at this one, you can see how price came down. We accumulated for a while, and then we just went north in a real hurry. And look, we've managed to have 1, 2, 3 continuation patterns. This is probably the 4th continuation pattern on its way higher. This area has been tested. This has not. This has not. This has not. So this is a low probability. This is high, and this is the highest, because this is kind of the root or the origin of this move. Here we have another one. This is nice. This is completely fresh. When price moves in and out like this for a while, and then all of a sudden we have a big push, this clears the market out. We clear out all the liquidity. So when you see this, this means that a new liquidity has been introduced to the market, making this fresh demand. So this is a brilliant area just here for that reason. Have a look on the 4-hour chart. What do we have? Well, we have this one here, which is looking pretty nice all the way down here, and we have this one here, which is fresh. Price has moved up and through this area, has thinned it out. This is fresh, clean, fresh liquidity established. Anticipation that price is going to react down around here at some stage over the coming trading days. Maybe something around there. I don't have the rectangle enabled, but you get the idea. And so ideally you want to see these really big pushes away. We have another one here. Price went up, we came down, and we shot up again like that. We have something similar here, and we have something similar down here. And these have not been qualified for, as I mentioned, the rules are static. You have to define a set of rules, and not all quality areas of supply and demand are going to meet these rules. But this is when you have to use your trained eye to identify the areas. Here we have a couple of more. This one, this one, this one. This is nice. This is good. This is good as well. We have a lot of really nice areas above price. This one is not good. Why? Because it's been tested once. So we don't expect this to hold in the future. And above this, we don't have any demand anywhere. We have this actually, and we have this. But this is not demand. None of this is demand. This is a reaction to a child here. So this probably won't do a whole lot once price comes here. We might have a small reaction, then probably price will probably feed down to this or this lower down. So let's find a chart. Actually, I was looking at the dollar yen. Yeah, this is a really good one here. You can see how price kind of was moving up and down here, then it shot down. This is nice. Price left the area quickly. It moved considerable distance in limited time. This is great. We have the same thing here. Price went up, accumulated for one period, shot down, and we've moved a considerable distance in a limited amount of time. You can see we moved about 3 or 4 times this area of supply within one period. Price came up here, seeking liquidity to drive price lower, which it found. Boom. Price moves up to the origin of this move, and this is where we reacted from. We have something similar here, how price went up, we shot off, price came up to the area and moved away. We have another one here which is currently being tested. Then we have this one down here which I like, and this is good because price rallied, accumulated rally, a nice continuation pattern here that is still untested. So we'll have to see what happens down here in the coming days. Go on the hourly chart, you can see that we have this area up here. Price left very quickly. It traveled very far in very limited time. Now price is creeping up. We tested it. So here we have supply. This is a reaction to supply. Price left very quickly. So we could assume that there could be orders located around this area of child supply. We have a supply here. This is a parent. We have this one here, which has been tested once. We established this parent-child relationship just here. Price is now moving higher on its way to this. This would be the next point that we would consider to trade, because this is the one that's closest to price. The problem with trading this one or this one is that by the time price gets up here, the sentiment could have changed, and so you want to be trading at bleeding edge of price. So you could go here and you could go, all the way back here, for example. But the dangerous thing about that is that maybe the dollar has attracted flows and the yen has shed some flows, which is going to decrease the likelihood of this area holding in the future. That said, if you find the good areas, then price will absolutely positively react there. So just try and trade the ones that are bleeding edge, like this one and this one and this one. This is fresh, tested. This is pretty much tested now. For the time being, where we have this one down here, this 4-hour area which is established, I like this one a little bit lower, but this is kind of, price has kind of reacted to the high of this area here. Let's have a look. Yeah, it went to the highs there and we had a nice reaction. Now price went north. So we could expect potentially price to move down here. We might have some divergence going on as well here, where we have kind of from here to here. And if we had an oscillator on it, would probably be going the other way. Price has moved above this high here, kind of telling us that this is probably a pretty price sensitive area. So we could look at that for some kind of a reaction. We have a look at the Aussie yen. We have a look at some other ideas where you can see that we have this one down here, which is lovely. Price is reacting on this daily area. If we have a look at it, this is this area here, which has been tested once. This is a second test. You go to this one here, you can see that the one closest to price is this one here, which is still untested. Price traded through the area, cleared out liquidity. This is fresh liquidity that's entered the market. We moved a very far distance in limited time. This will be the first time back, which I like. What you don't want to see is, for example, continuation patterns where you have an extended period of accumulation. So let's see if we actually, on the yen, we have one on the daily chart. So if we have a look at this for a second, how price rallied and we accumulated for one period, this is good. If we accumulated for 10 periods, this is not good, because this shows us, or this tells us that we have an agreement in supply and demand. In such a case, what you would do is you would take the area of demand that is closest to the closest to the release, and trade that on a smaller time frame. Because if you're going to be trading a 10-period area of, for example, demand with the same risk as you'll see on a daily chart, then you're probably going to have a tough time. So you want to take the one that's just at the bleeding edge, just at the point of release when price jumped north, and take it with a much smaller pip risk. Good. Let's have a look at the EURCAD. Here we have this lovely area which has been tested. And, this is the cool thing about this is that this area of demand was on the chart. 1, 2, 3. 1, 2. Actually, I can tell you. Let's have a look. 3. After 1, 2, when this this blue candle here closed, this rectangle was drawn here. So there's plenty of time to plan that trade. Now we have this lovely one just above price that we would expect price to react on. As you'll notice, the supply and demand significance has been removed because we no longer need that. This new feature of the new implementation of supply and demand doesn't need that anymore, because it's not looking for respect for an area. It's looking for a release. It's looking for accumulation and a really big move higher or lower in a very limited amount of time. And so that is the new kind of the new engine of the indicator and how it's qualifying these areas. So the supply and demand significance has been removed, which I like, because it was too subjective previously. A lot of people were writing and saying, should it be on 3 or 5 or 8 or 50? And it's a tough call. And so now it's been eliminated, and it's only looking at price to qualify these areas now, which is much more preferable. So you can see here, I mean, price is moving higher, so you want to be buying. So you go to the 1-hour chart and you find areas to buy. You can see price came down here pretty close, once, twice, but down here this area is still untested, which I really like. I mean, look how price left. I mean, we had 1, 2, 3 bullish candles away, and price has not even come anywhere near this area of demand. I really like this one down here. We have another one here that's pretty good. Price did manage to dip back in pretty deeply, and we tested the high of this area, which makes this maybe less attractive, but it's still okay. I like this one. This one is also pretty good. Might want to go to the smaller time frame and have a closer look at this one, and you can see that this one is actually let's draw this in manually. See where that is. Okay, it's right there. Okay, fine. So now you can see where it is, and it's just around here. And on the smaller time frame, you can see that it doesn't look too interesting at all. So we might want to pass on that one. But just keep things in mind. Keep your eye on the larger time frames. Demo trade stuff that looks like this. You can do live trades and stuff like that. But just be careful. Don't overcomplicate it, and I think you'll do fine. Right, I can hear my zoo just walking in the door, so I better cut this short. But if you have any questions, please let me know, and I will see you next week. Thanks for watching.